As an investor, and I do a lot of speaking around the country and stuff, and a lot of people will come and they'll talk to me and they'll ask, hey, is this a good deal? My first answer is I don't know. I don't know what a good deal is to you. A good deal to me could be X. To you, it could be Y. So yes, it probably is a good deal. It just may not be a good deal for you based on your goals.
Right.
And that's the biggest thing that people really, they spend so much time focusing on the interest rate or the insurance pricing or the HOA fees. They never really think, how am I going to get the return out of this for the next 20 years for retirement? They think, well, that'll just fall into place and happen. And they don't have a business plan, or they don't have any goals to say, how does this work? And, anybody can buy a property, but not everybody can run that business unless you educate yourself. So that's a big thing.
So I got a couple of tactics out of this already. One, remember, as you're investing, it is a business.
Absolutely.
And two, like any business, you need to have an exit strategy. You need to have a goal. Begin with the end in mind, as Covey would say.
Absolutely. And when I talk to people, one of the things I ask them is, why are you doing this? Like, what is the reason you want to buy a piece of property? And they say, oh, I want to have it for retirement. So when they're looking at a property, they're worried about the cash flow of a deal, and they'll say this is not a good deal. And then I'll ask them a couple more probing questions. And I'll ask them, I thought that you have a job and cash flow is not important to you because you don't need it because you have a job. Well, it's not. So is it your ego, or is there a financial reason that you want this $200 a month? Because if the appreciation is such that it's going to double in the next 15 years and double again, and you're going to have a 30-year hold on it, does it really matter if it's making or losing $200? Because the end game is, what does it do in 30 years from now? And again, nobody taught that to me, so I'm a prominent speaker to explain that. Like, just like you said, you own a business, and when you have a piece of rental property, the IRS says your business, Texas Property Code says your business, fair housing, discrimination. The reason why landlords are the highest sued in real estate is they are the one person that does not realize they are a business, and they don't have a business plan. They don't have policies, procedures, structure, and they think it's a singular sport. They don't realize when you want to get a loan, you get a qualified mortgage company to give you that loan. When you want someone to design the property, you get an architect to design the property. Same thing with insurance. After the purchase, that's when they think, that's the part I'm going to put on my cape and I'm going to do it myself. And they don't realize that is actually just as vital as everything else, because if you buy the nicest tree in the nursery, you put it in the ground, but you never water it, you're never going to see the fruit come from it, and you're never going to reap the rewards. And again, it's just the after effect that they don't think about. And that's what we try to implement and impart on them.